Welcome back to Financial Market Insights for Traders with Sophia, where we break down the latest trends in finance, trading, and investing so you can make smarter decisions. Today's episode is all about a fundamental concept that applies to every financial decision you'll ever make: balancing risk and reward. Whether you're a trader, investor, entrepreneur, or just someone trying to make better financial choices, understanding the risk reward trade off is crucial. In today's fast changing markets, where stocks fluctuate wildly, cryptocurrencies crash and rebound overnight, and global economic policies shift on a dime, getting this balance right can make all the difference between success and financial disaster. So, how do you measure risk against reward? How can you protect yourself from unnecessary losses while still making solid returns? Let's dive in. Understanding the risk reward trade off. At its core, the risk-reward trade-off is the principle that potential returns increase with an increase in risk. Generally, low-risk investments like government bonds or treasury bills provide steady, predictable returns with minimal risk. Moderate-risk investments like blue-chip stocks or real estate offer higher returns than bonds but come with some volatility. High-risk investments like cryptocurrencies, options trading, or startup ventures have the potential for massive gains, but also the possibility of significant losses. This trade-off is present in everything from investing in stocks to launching a new business. If you want the possibility of higher rewards, you need to accept the likelihood of greater risk. But here's the thing: blindly chasing high returns without a proper risk management strategy is one of the biggest mistakes traders and investors make. Let's take a look at what's happening in 2024 to see how this plays out in real-world scenarios. Recent market events, the risk-reward trade-off in action. In today's market, the risk-reward dynamic has been more pronounced than ever. Just look at a few key trends. 1. AI stocks, boom or bubble. AI-driven companies have been the hottest trend of 2024, with stocks like Nvidia, Microsoft, and Tesla soaring. Investors who took early risks on AI-related stocks made massive returns. But now, some analysts warn that valuations are overinflated. If AI stocks enter a correction phase, investors who chased high returns without risk management could face steep losses. 2. Bitcoin's wild ride. Bitcoin surged past $70,000 this year, hitting all-time highs, only to experience extreme volatility in response to regulatory crackdowns in the US and Europe. Traders who used excessive leverage to chase gains saw their accounts wiped out during sharp downturns, while those who applied proper risk management stayed profitable despite the swings. 3. Interest rates bonds. With central banks keeping interest rates elevated to fight inflation, traditional safe haven assets like bonds have finally started offering attractive returns. Investors who ignored bonds for years in favor of high-risk speculative assets are now reconsidering their portfolios as safer yields become more appealing. All these examples highlight why understanding risk versus reward is more important than ever in today's financial world. How psychology influences risk and reward. The way we perceive risk and reward isn't just about numbers, it's about psychology. Behavioral finance shows that we are naturally wired to make irrational decisions when it comes to risk. Here are some key psychological traps to watch out for. 1. Loss aversion. Did you know that people feel the pain of losing money twice as strongly as they feel the joy of gaining the same amount? This is why investors often hold onto losing trades for too long, hoping to break even when logic says they should cut their losses. 2. Fear of missing out, FOMO. This one gets traders every time. When everyone is talking about a stock or cryptocurrency skyrocketing, it's tempting to jump in, even if the risk is huge. We saw this with meme stocks like GameStop and AMC, where many traders bought in at the top, only to watch prices crash soon after. 3. Overconfidence bias. After a few successful trades, many traders believe they've mastered the markets until an over-leveraged position wipes them out. The key to long-term success is staying humble and sticking to a strategy. Understanding these psychological biases can help you stay disciplined and make smarter financial decisions rather than reacting emotionally to market fluctuations. Risk management, strategies for smart investing and trading. So, how do you manage risk while still pursuing strong returns? Here are some of the best strategies. 1. Diversification, the classic rule. Don't put all your eggs in one basket. Spread investments across stocks, bonds, commodities, and even alternative assets like real estate or crypto. 2. Position sizing. Never risk more than 1 to 2% of your account on a single trade. This ensures that even if you have a few losing trades, your portfolio remains intact. 3. Stop loss and take profit orders. Set predefined exit points to limit losses and lock in gains. This prevents emotional decision making. 4. The risk reward ratio. Aim for at least a 2-to-1 ratio, meaning you risk $1 to make $2. This ensures that even if only half your trades are winners, you're still profitable. 5. Hedging strategies. Use options, futures, or inverse ETFs to hedge against potential losses. 6. Continuous learning market analysis. Stay informed about global economic trends, interest rates, inflation, and central bank policies to anticipate market movements. Final thoughts. Mastering the risk-reward trade-off. At the end of the day, success in investing and trading isn't just about making money. It's about managing risk effectively. The best traders and investors aren't the ones who take the biggest risks. They're the ones who take calculated risks with well-defined strategies. So, before you take your next trade or make a big investment decision, ask yourself, does the reward justify the risk? If you're looking for expert insights, trading tools, and real-time market analysis, check out crystalballmarkets.com, where you can access professional strategies to help you optimize risk and maximize rewards. That's all for today's episode of Financial Market Insights for Traders with Sophia. If you enjoyed this discussion, be sure to subscribe, share this episode, and join me next time for more insights into the world.